you cannot have 1 trillion, 2 trillion of stablecoins on chain and most of it on ETH and not have ETH go up in price.
Imagine you have a multi-billion-dollar Bitcoin wallet and you're like, hey, it's in cold storage, it's safe, da-da-da, and you're not paying attention to it.
And this is the problem that Polymarket is currently experiencing, right?
Hello, everyone, and welcome back to the DeFi Podcast. Today is Thursday, July 10th, and we have a special episode for you guys today. We're just going to discuss a bunch of topics that have been happening in crypto with our regular guests, Rhett, Jared, and JF. Hey, how are you guys all doing today?
Great. How
Great.
are you?
Don't all speak at once.
Yeah. Well, everyone's tired because we just spent an hour arguing about the Epstein files, and we're not going to do that on the podcast. So we're a little worn out, but it's okay. Cool. Okay. Yeah. So just a quick market update before we talk about a few topics. Markets have actually been kind of quiet in the past week. Stocks are basically flat. From when we recorded the pod last week, so we're kind of still sitting at all-time highs. Bitcoin is up small, about like 1.5%, which is what we like to see. Basically crypto rallying while stocks stay flat. We kind of touched new all-time highs at about 112K. Like I think we beat all-time highs by like $1 or something and then retraced a bit. So it seems to be like a strong resistance there. But the ETH BTC ratio continues to improve, trading towards the top of the recent range, like we've been trading in since like the beginning of May. And part of that might have to do with the fact that the US House announced that next week is going to be crypto week. So I guess a lot of the new legislation like the Genius Stablecoin Act and the Clarity Act are going to be in focus. So I expect a lot of headlines next week about what exactly is in store for crypto over the next few years, assuming they're able to pass this legislation. Well, some of this is going to come into focus next week. So so anyway, anyone want to add anything on what's happening with markets this week?
I think
Bitcoin
for crypto, I wouldn't call it that quiet. Bitcoin, I think, touched all-time highs again, and most other majors are going up a lot faster. And then crypto-related stocks seem to be doing really well also. There's these 4 ETH Treasury companies that are newer, launched by pretty serious players, and they seem to be doing pretty well. If I remember right.
Would you say that SBET is the main one? It's probably the number one
so
ETH Treasury company, right?
I think it's the most prominent right now. Lubin is associated with it, and he's really serious. And they actually have some really interesting plans to tokenize some of the equity and have token gated benefits to earn yield on the ETH, but also do the financial engineering that MicroStrategy does.
This is crazy.
Tom Lee.
This is like they announced that they were going to be an ETH Treasury company, and the thing rallied like a ridiculous amount, traded at $100 or so, and then they had that share dilution scare that brought it from $30 down to about $10. But if you zoom in on the last month or so, it's done much better, right? So if you take that boom, in the last month, it's done much better, right?
It's doubled. So it's doing really well. I think Tom Lee is a pretty serious player too. He was an early Bitcoin bull. People kind of thought he was crazy at the time. He's an early Tesla bull. He's really got a really good kind of public. He's a really good public facing guy. So for him to be kind of a Michael Saylor type, I think is really positive for his company too. One of the others has announced that they have some plans to earn quite high yield on their ETH. It's probably going to be mostly in DeFi. And then I've heard rumors there might be a 5th coming that could be a serious player as well. But I think the treasury companies for Bitcoin were really good for Bitcoin price and adoption. I've talked about this before. And the fact that we have multiple now competing to accumulate ETH, and they're not low quality players. Like Lubin and Tom Lee are both really serious players. I think that's really good for ETH. I also think it's really good for the entire crypto market.
Yeah, the question is are they going to be able to generate a cult of personality or, I don't know, this marketing machine that Michael Saylor has just created? I remember when Michael Saylor went on Up Only, did you guys watch that episode? Basically, the 2 guys from Up Only, Kobe and Ledger, They brought Michael Saylor on. They asked him a question, and then Michael Saylor basically just talked for 3 hours. Like, I'm not exaggerating. The podcast was like 3 hours long. And if you create a pie chart of how much each person said, like Michael Saylor just talked like forever. Like he could just talk and talk. Like just I don't know.
He's a weaver of stories. Yeah.
Yeah. His mind, it just goes, right? I mean, is there a guy like that in Ethereum who can just, you talk for 3 hours in a bullish manner? Like there's going to be a bunch of clippable moments that are just going to make it all over the internet, right?
Yeah, he's definitely a eloquent and almost like a mesmerizing storyteller. I think as far as like a person who's likely to create a cult of personality around themselves, Joe Lubin he's kind of a quieter guy. He's not like a storyteller like that, but he is very smart, and he comes off really well when he talks about things. And I think that he's done a really good job of shifting the narrative of like why an asset other than Bitcoin is a good store of value. It's a different type of person, but Tom Lee, my view is he already has a little bit of a cult of personality. He already has a big following. People love him. He made a lot of good early calls. He's really smart and reasonable, and he gets a lot of airtime on like financial news. So I think Tom Lee could kind of serve that.
I feel like it's maybe also a different pitch that you want, and these personality types might serve that pitch better. I don't know if I'm right on this. I'd be curious to get your opinions, but like the Bitcoin pitch feels a little bit less sophisticated. Like it's, this thing is gold.
Absolutely.
Whereas to be able to pitch, hey, this is the future technology, this is the underlying, economic engine and token. And there's a lot of like sort of intricacies in making that pitch. And maybe like a quieter personality teamed up with a couple of guys who are good at talking, on CNBC, like Tom Lee, that sort of like mix. If you can have a small army of these guys, maybe you don't need one guy, right? That has like a personality that you follow like a god, and you have like instead like a small community of really smart sort of influencers. They probably wouldn't like that title, but that might be a better fit.
So far, they've both Lubin and Lee have been really good at arguing the case in a way that makes sense to sophisticated investors, in my opinion.
Yeah, dude. I mean, to be honest, like to get the attention of retail, you just kind of have to be like perceived to be intelligent, and like the details of the coin or the chain like don't even really matter. Like what I was saying about Michael Saylor, you can go and see similar thing. When I was getting into crypto, I saw a 5-hour long interview with Charles Hoskinson, right? I had bought some ADA and I was like, okay, what the hell is this thing? And he was interviewed by Lex Friedman. The interview was like 5 hours long, and it was fascinating. Like I was at a time when I was working a job in finance. I didn't have that much time to listen to podcasts. And I was like, wow, I got through this 5-hour thing. It was absolutely fascinating. But then I stopped and thought like, dude, he actually didn't talk about Cardano or what you can do with ADA, like at all. Like he's zero, like in 5 hours. Right. But somehow like just putting out content and seeming smart, like, and he is smart. Like that dude's like undeniably pretty smart dude. Like somehow that
he reminds me of Saylor a lot. Yeah, they're both good weavers of stories, and they are both the type that they can just kind of wax long with their stories.
Yeah, you just got to get them started, and they'll just go, man. Yeah.
By the way, it's not retail that you need to.
This week, and I don't know if you guys had a chance to see it. I think it was actually like yesterday, so it's like very, very fresh. But I saw clips, like I saw a 20-minute clip, and it was very high quality, actually. It was very, very good. I recommend it.
Okay, I'm going to check that out.
Yeah, I watched it. By the way, you don't need someone who is eloquent to retail, in my opinion, for a treasury company like this. You need someone who is convincing to very serious Wall Street investors, because what you need is to convince major players to buy your bonds that you're going to turn around and buy the crypto asset with. And so that's not retail, right? And Saylor has been really convincing to enough of Wall Street that they've kept buying MicroStrategy bonds at good terms, and he keeps buying Bitcoin with it. And so you really need someone who's convincing to those people. I can't think of a better couple of people than Lubin and Lee for that. And the arguments they make are really, really sophisticated, really good arguments that I think resonate well with those sorts of people. And those are the only ones that matter for a company like this. So I think they're perfect, actually.
I'm curious about that though, because when you see like excerpts or clips of Michael Saylor talking, the ones that are the most popular or go the most viral or what have you, like they're all very basic. You might even call them kind of dumbed down things, right? Like the one where he's like, sell your house and buy some Bitcoin, then sell your car and buy some Bitcoin, and then, quit your job and buy some Bitcoin. And it's like, I'm sure he can make the eloquent points, but really what he's doing most of the time is he's kind of just taking the Grug take, which is like the simplified, why is this thing valuable?
I think, though, there is a difference between what clips go viral on X versus what statements resonate with the investors that are buying his bonds. And I think he's actually been a legitimately like a really smart financial engineer. Like he's come up with bonds that they get good terms on that investors really want. And that has been really like, that's where his real genius has lied. And I think that is less about like the public persona, although he has a public persona too. So it's like, okay, you get two birds with one stone. I'll tell you one of the things that I expected that I was like super wrong about is I kind of thought like, because these treasury companies work best when their stock trades at a premium to the value of the assets in their treasury. And, if MSTR is trading above its Bitcoin holdings, it makes a lot of sense to issue new convertible bonds and buy more Bitcoin and just keep doing that so long as there's a premium. And I thought like, okay, people are using MSTR to get access to Bitcoin, people who are like maybe TradFi people who can't just open up a Coinbase account. But once the ETFs hit, they're just going to buy in the ETFs and they'll stop playing the MSTR game, because why buy at a premium when you can buy it like at NAV from an ETF? ETFs launched and they've gotten way less traction than MSTR. It was the exact opposite of what I expected. I thought MSTR's premium will die, the bonds will no longer make sense, and they'll be like an uninteresting stock. And instead, they've sucked the air out of the ETF room. And I think part of that is because what people have seen is that if he can continually be really smart with his financial engineering, he can compound the amount of Bitcoin per MSTR share. And so if you buy MSTR instead of just buying the Bitcoin ETF, you might get a growing amount of Bitcoin per share. And that's really interesting to a lot of people. So that turned out exactly the opposite of what I expected. For these ETH Treasury companies and other crypto treasury companies to work well, they also are going to need to be able to preserve a premium. And to do that, they're going to need to be able to like demonstrate that they can consistently compound your, crypto assets per fully diluted share. And some of the newer players, I think, are going to be doing it in more than just the financial engineering way, which makes me like really bullish on these. Like if you can compound it by good financial engineering, you can also compound it by earning yield in DeFi, then there's something extra interesting there to me. So I think I was totally wrong. And I think the ETFs are going to move the needle way less than people had previously anticipated, and treasury companies will move the needle more.
Very interesting. Yeah, I wonder how the ETH companies are, sorry, go ahead, Jeff.
Well, actually, if you're going to continue down this path, go ahead, because I was going to maybe change the direction a bit.
Yeah, all I was going to say is like, it's like as someone, if I'm working like a, regular corporate job and I have a 401k and I get corporate match, like, I get matching basically from my employer, and I want to get exposure to one of these crypto plays, but kind of with free money, right? Like, but have some optionality and cult of personality behind it, right? Right now, no one has asked me about Joe Lubin, but a handful of people have asked me about Michael Saylor. So, like, I feel like that's where the bid is coming from for the equity side. I just don't.
But how long have they been asking about Saylor? Because Saylor's been around doing this for several years, and maybe it took a few years of momentum for his name to get out there.
Yeah, that's very fair. That's very fair. So maybe right now is the time to get in on these. SBET. I mean, when it crashed to $8 or something, I thought about buying it, didn't pull the trigger, so I'm regretting it now.
My other prediction, by the way, is that every major crypto asset is going to end up having at least one treasury company. Solana has one, ETH now has 4, Bitcoin has like a ton. But my guess is 5 years in the future, there will be at least a dozen assets that have at least one treasury company doing this. And it'll mostly be distressed companies saying, how do we pivot to something other than the business that we had originally built? And we're going to become a treasury company, but Bitcoin is crowded, so I'm going to be the treasury company for XYZ token.
Yeah, I'm sure all the majors within like the top 25 probably have people working on these, right? Like you name a coin, there's probably some people working on the treasury company for them already, you know? Yeah, sorry, Jeff, did you want to move on to the second topic? Do you want me to move on to Polymarket?
Yeah, I'll just say one closing thought maybe. So last week, I think I made the point that, if you have an L1 gas token, that doesn't need to go up with adoption of the, it can go up a little bit, like it could follow adoption, but that's not going to take you to the prices or the price targets that you're seeking as a blockchain, which I stand by. But I do think also in parallel that Ethereum is a very sellable product, and so is AVAX, and so are other L1s. But you have to have someone out there making that sell, right? So I think this week, it's sort of funny how it seemed to all converge since last week's spot, but like this week we saw a lot of ETH news, and everyone is sort of making a case that, hey, this is going to be a good asset to hold. For maybe the pitch is slightly different from person to person, but like just generally speaking, like, hey, this is probably going to go up. It's probably going to be very valuable for X reasons. And I think if you keep seeing that, I don't know, I become bullish on the assets as there's more people sort of like getting that message out. And obviously having these treasury companies straight up, building the product to go actually execute the trades and build the volume is obviously very, very, very helpful.
So a couple of thoughts on this. I think one of the biggest weaknesses that ETH has had narrative-wise in a long time is that EIP 1559, which I think actually was a good EIP, also just shifted the focus onto what I think were the wrong things, which is like everyone paid way too much attention to the revenues of the chain when you're referring to gas tokens. I think that's like the chain should have some revenue that helps with like economic and security sustainability over time, but that's not the primary value driver. And Bitcoin's the perfect example of that. Bitcoin has really low revenues for miners. If you look at like transaction fees and all of that, it's like that none of that is what's driving the value for Bitcoin. And the Bitcoiners were smart enough to recognize that and never talk about that. Whereas ETH people got obsessed with the burn, and they're like, hey, look how much revenue the chain's generating. And while that's a good thing, it should not be the thing you focus on. And while it provides some level of value, it is not the primary value driver, in my opinion. And so this goes for a lot of tokens. It goes for Bitcoin, it goes for ETH, it goes for a lot of the L1 tokens, that you should value them as think of them as like emerging market currencies, that there's some amount of value with the revenues of the chain because that influences its security long term, and a chain needs to stay secure. But you should think of it more like what's going to make you long term bullish on the dollar versus the euro. Mostly if you think that the US economy is going to grow a lot relative to the European economy, right? Because if the US economy is the biggest economy in the world, its currency, and if it's the fastest growing economy in the world, its currency will strengthen over the decades, right? And so I think of that similarly here. Is like if you think that Ethereum or you think that Bitcoin or whatever layer one is going to have a massive amount of activity and adoption and building on it and people holding that thing, then those things are going to drive the value much more so than like revenues of the chain. And so part of it's adoption, how many things are being built on there. Part of it is like you do want the right properties of the token, like something that's not ultra inflationary, because the US could have the fastest growing economy in the world, but if the Fed is just constantly pumping money into the economy, you still might have hyperinflation and massive debasement, right? So you do have to have some good properties as well. But I think a movement away from the conversation about revenues is a really good thing. And by the way, if you look at what Lubin and Tom Lee say, they've moved to a much better narrative. Lubin's talking a lot about, hey, this is tokenized trust. And trust is very valuable. Trust is even more valuable in like the Web3 world. And this is like a highly trustworthy ledger. and that the value of that trust is really high and growing. Tom Lee talks a lot about how, hey, the whole world's coming on chain. There's all these stable coins coming on chain, et cetera. And all of that drives direct value to the chains they come onto. And most of them right now are on Ethereum. And I think those are like strong narratives more so than, look, we have a lot of revenue to the chain, and then you get valued by discounted cash flows, and that's a pretty weak way to value something like this. And no one would ever value Bitcoin or gold that way. You shouldn't evaluate Ethereum or AVAX or Solana that way either, in my opinion.
So listen, I was going to switch over to Polymarket, but let's actually table that for a second and just focus on ETH and get this one, because you're talking about stable coins, and we were making this point earlier this week. JF, actually, you made this point. I'm stealing your thunder a little bit, but you were talking about like, look, you guys both kind of work in the stablecoin space, and stablecoins, obviously, like everyone's creating a stablecoin. It's super hot. I think the TVL is only going to go up, right? So there's something like, I don't know how you count it, but it's like 250 billion or something in stablecoins total on chain, something like that. And if you have Ethereum at 300 billion market cap and Ethereum stablecoin volumes, go much higher than they are, and they're like at 1 trillion, which is not inconceivable. Like it could easily get there. Then what happens? What happens when the chain is, stablecoins minted, seems like it's only going to go one way, higher. The question is like, how high is it going to go? So if the place to put the bulk of your stablecoins because of security is ETH, and you get the ETH with like 1 trillion of stablecoins minted, then Ethereum at 300 billion, like what's going to happen there? Obviously there's like some security concerns, like what's going to happen with gas? Like, is it going to be able to handle the throughput? How much of it is going to move to L2s? Like, what does all this mean? If we assume stablecoin volumes are, minted are going to go up to like 1 trillion, what happens to ETH? Like, what does 300 billion make sense? Is it going to go higher? What do you guys think?
I think it's in the trend that we're seeing, the way, you can spin up a blockchain, have applications, have assets on top of the blockchain. It will only make sense that the value of the assets at some point will exceed the value of the chain itself. I've heard, there's a lot of people who say that the value of the chain needs to stay above the value of all the assets on it because some security reason. I don't think that makes sense, because if you see people switching over to using blockchains at a really, really rapid pace, yes, it's going to have a massive effect on the underlying assets of the chain, its gas usage and revenue. But you were just talking a second ago about how revenue doesn't necessarily mean that people are going to be more interested in getting into this asset. So but
Jared, let me ask you, what happens mathematically, like when you get to $1 trillion in asset on a chain and the gas token for that chain, or that L1 token, is worth 500 billion. So now you have twice as much value, like riding on top than the base. Like external assets. So you have let's say $1 trillion in stablecoin and, $500 billion in ETH. Like, what happens if that's the situation we're looking at?
I'll tell you what happens.
I don't think anything happens. I think people are assuming this is some kind of like Y2K thing, where it's like, as soon as the number switches over, the chain's going to explode. Like, it doesn't, there's no, like, nobody's going to go and borrow $500 billion so that they can, exude some leverage on the chain. It's just going to, if somebody tries to do that, it's just going to massively increase the value of the chain.
Exactly. So that's actually,
I don't know about you, but
yeah, go ahead, Rhett. Go ahead.
All my family's computers blew up on, in the year 2000. So, so one thing to point out is that, I agree with Jared that, if the TVL of the chain exceeds the market cap of the chain, it doesn't necessarily imply doom. But there is a different relationship here. And I think it's one thing that Tom Lee has talked a lot about, where if I'm JP Morgan and I'm going to issue deca billions of stablecoins on a given chain, I probably am going to want to myself participate in the security of the chain. And so then I'm going to go buy some of those native tokens and start staking. And so that will drive up the value of the chain. And so what he expects and what I expect is that all these big players, every major bank that throws a stable coin on a chain, and every BlackRock throwing a bunch of tokenized equities on the chain, all of them are going to want to participate in the security of that chain because they have a vested interest themselves.
Pause. Sorry, I don't mean to interrupt, Rhett, but as a guy who worked at a bank for 10 years, I mean, I didn't mean to throw a wrench in your gears here, but like I just don't see that happening. Like Citigroup, if they were going to issue, that's where I used to work, right? I used to work at Citi. They have a lot of smart people there, and they have a digital assets group, and I know some of the people on that team. Like the idea that they're going to issue, because they're going to issue stablecoins, that they're going to run ETH validators. I mean, those two are not necessarily linked. Like I think it's a very high bar for them to all of a sudden take on the potential regulatory risk of running a ETH validator. You know what I mean?
Where's the regulatory risk at this point?
Well, I mean, like, okay, technically you could say that whoever's running an ETH validator, I mean, I don't agree with this, but you could argue that whoever is running an ETH validator is approving transactions from places like the DPRK, right? Like,
oh, you can easily run like an exclusion list. Like you can say I'm going to refuse all transactions in blocks I propose from like any of these.
You're 100% right. Regulators don't care, right? Like if a regulator wants an excuse to get you, they're going to get you, right? So like you can't give them any surface area to attack at all. Like I don't.
But
think
regulators haven't been going after validators at this point, and ETH is now like strongly in the commodity camp. And even under a more aggressive administration, validators weren't getting attacked. Given that like we're into like
validators,
this.
I agree with you. Validators haven't been. Banks are essentially run by regulators. Like that's what's happening. Like,
but guys, whether or not these guys want to run validators or not, like the idea is that like, okay, a bank is going to issue stablecoins on Ethereum. It doesn't necessarily mean that they want to participate in other activities. I mean, I would agree with that, right? Like it doesn't mean that they're going to want to own a piece of it necessarily. So I don't know.
Some of them will. Some of them probably will just, trust the underlying system.
If they're worried about security, I feel like there's like an
research.
alternative sort of like life that could happen, which is that JP Morgan says, hey, we want to have a stablecoin and we are worried about security. So we're going to launch our own chain and it's going to be a proof of authority chain, or it's going to be, we'll own all the tokens ourselves. I don't know.
I actually agree with what Jared was saying earlier, which is that like basically the value of the chain just is going to go up. Like if we actually see like an accelerate, I think Circle's stablecoin volumes have kind of tailed off. I mean, they magically like spiked up right into the IPO and then have basically leveled off since then. Big surprise. But Tether is still like just crushing it. And yeah, like I think as these numbers go up, it's just inevitable that if a lot of those stables end up on ETH, like it's just going to drive the price of ETH up. Like that's just my opinion. Like you cannot have 1 trillion, 2 trillion of stable coins on chain and most of it on ETH and not have ETH go up in price. Like I just don't see that happening.
I think it will definitely go up. I just don't think that there is any kind of correlation you can draw between how much TVL is on the chain versus what is the chain inevitably going to be worth. Like if you get more of one, you'll most likely get more of the other, but it's not a guaranteed.
Yeah, I believe that there's it's not a one-to-one correlation, but that there's a pretty strong correlation. I actually think of like even like national currencies similar. Like I think a lot of people are like, well, look at the dollar, it's valuable even though there's like no value underlying it or whatever. And I think there is value underlying it. Like US dollars is how you pay gas fees in the world's biggest economy. Gas fees meaning taxes to the US government. And it's the biggest economy in the world by far. And even if everyone hated dollars, you would have to own a certain amount of them to pay taxes to participate in the world's biggest economy. And that creates a nice foundation of value for USD. And then there's a lot of other things that drive additional value. And I think there's definitely a correlation between the size of the US economy, the expected growth of the U.S. economy, et cetera, and the value of the U.S. dollar relative to others. And I think there's something here too. So it's not necessarily one-to-one, but I would be absolutely baffled if, like, let's say there's 3 chains that capture 95% of the RWAs and stablecoins over time. If those don't end up being 3 of the most valuable, gas tokens in the world, like it's not a one-to-one, but it's definitely not a zero correlation.
But there is something very different about the country example, because if you want to trade in the US, like let's say you want to do business with the US, you have to buy US dollars, right? Because that's what you're trading in. But if we continue to trade in US dollars and I want to use US dollars on this new country called Ethereum, I don't actually need to buy ETH. Like I need to buy a tiny bit for gas, but like it's not the dollar. Like it's not the same comparison, right? Like unless we all adopt ETH and we draw the dollar, then you're right.
It's the liquidity in the system, but it's not what you earn for participating in the system. Yeah, I see what you're saying. Yeah.
You do have
Last
to
thing I
still
wanna
buy
add to
ETH.
this
It's just
is-
not that much.
Yeah, exactly. That's sort of the problem. Like I'm not saying you're wrong, by the way. Like I'm not saying that ETH is not going to go up if we get a bunch of stablecoin deposits on Ethereum. I think it will, but it just the mechanics are not the same, and I don't know for sure what happens.
Well, the blockchain to country analogy kind of breaks down when you realize that, ETH is not going to wage war against Solana because they want to use a different economy. There's no sanctions that ETH can place on another chain.
There could be some sort of like.
There's network effects. Even in the absence of sanctions, the US dollar would still be more valuable than the euro. Because it's a bigger economy, it's growing faster, etc. And so it's not a perfect analogy for sure. But I'm just saying, like, look, here's my prediction. In 10 years, the 10 chains that have the highest TVL on DeFi Llama will be much more valuable in aggregate. Their gas tokens will be much more valuable in aggregate than the 50 chains with very little DeFi TVL.
So I fully agree with that. I guess my question is, how valuable will they be, right? Like, and that's where I have a hard time like coming up with a clear sort of framework.
Okay, cool. All right, listen. We're actually going to talk about this later, but it's good that we have a bunch of topics. I think we can get to two more. Let's switch gears and talk about this one about the Zelensky suit bet on Polymarket and JF's personal experience with a similar bet. So first let's talk. Let me just
can we
share
throw up a
screen
photo
real
of
quick.
the suit so we can?
Yeah, I have it ready already. Yep, here we go.
Discuss.
Okay, so first question is, let's just go through the panel here real quick and just say, like Ansem asking us, like, is this a suit, right? So what do you guys think? Just go around there. When you first saw this, did you guys think this was a suit or not? What do you think?
I would say
are jeggings
70%
considered
yes.
jeans? If you put on a pair of jeggings, is it fair to say that those are jeans?
Rhett, what do you think? Suit or no suit?
I would say 70% yes, it's a suit, but it's not as obvious as certain suits.
Okay. Rhett, what about, JF, what about you? Is this a suit or not a suit?
It's a perfect question because I really don't know. It depends on the rules. It depends on what we define as a suit. And this is the problem that Polymarket is currently experiencing, right? Like you're betting on a market, and if that market did the Dodgers win or lose? Like you have a pretty definitive like yes or no, right? So like finding out the answer to that question is on any given game easy. But there is no, even whatever the dictionary definition of a suit is, it's not mathematical. It's, there's no definitive definition. So to have a prediction market based on rules that are unclear creates issues. And then on top of that, with the story, and Bill, I can let you introduce this part, but you have this sort of the second hand where you have the UMA part that.
Hold on. We're going to get to all that. Hold on. So Jared, is this a suit or not? What do you think?
I'm gonna say I think I sort of indirectly answered your question by asking: if you're wearing a pair of jeggings, are you technically wearing a pair of jeans?
Are these jeggings? I don't even know what
jeggings
are.
If you're wearing Crocs,
So,
are you wearing shoes?
I think one of the important things to note here is there is a definitive way to go and find out if this is a suit or not. But people who are engaging in these markets are not going to go through the process of looking into the definition of what is a suit, what defines a suit, right? They're just saying, is it a suit? Some people say it looks like a suit. Some people say, oh, well, that's technically not a suit. Like, they're not having a very high level conversation here. This is like people just sort of disagreeing on the internet about,
Look, this is
it may be the worst suit ever. That would be my answer. So it could be a suit, but it's just.
This is not a suit. Okay, this is how you know this is not a suit. Okay, if I was interviewing you for a job and I said that you had to wear a suit to the interview and you wore this, you're done. Like, we don't need to ask you any questions. Like, thank you for coming. I'll see you later. Like, this is not a fucking suit. Like, maybe in crypto, but like the guy's, he's like the head of a country. It's not a suit. But anyway, okay, let's talk about why this is important.
Is the only suit that would count for you in that case a birthday suit or what?
I mean, look, I'm the other direction because of my military experience. Like, it has to be like, everything has to be fucking sharp. Like, otherwise I'm not giving you credit for it. But like, he could have done more. Like, he's obviously trying to cheat the system. That's what the guy's doing. So let's talk about why this is important. So I think this is the right bet. So basically on Polymarket, there's this bet. There's tons of bets on Polymarket. But what's interesting about this one is will Zelensky wear a suit before July? Okay, but the really interesting part is you look here, dude, this had $242 million worth of trading volume. I mean, I don't know how much of this is just wash bullshit trading volume, but I mean, that's a lot of trading volume, even if it's wash trading, right?
I follow some of these markets. Like, this is a big number. Yeah.
This one's big, right? Like, this is like the big, like, I think when you go to the main Polymarket page, like, it sorts things by, like here are the big bets, like 35 million, 19 million, right? This one, the total amount, 242 million. That's a big amount of money exchanging hands, right? I guess, let me just explain real quick. For that, yeah, let me just so he wore the suit, I think, around this. It was trading like basically you could have bought this thing, the Yes token, at like 2-3 cents or something, and then he wore the suit, and some news outlets started reporting that he wore a suit.
Did you say he wore a suit?
Oh, sorry. Yes, I'm sorry. Yes, you caught me. Good job. He wore that outfit, and so this thing traded up at like almost 20 cents. And then it came back down. And why did it come back down? Well, because the UMA token, which is the secondary token that this thing goes to if it's disputed, the people who own the UMA token basically said, no, this thing is not a suit, and voted it down. And so anyway, this opened up a big problem because, like, if you have these prediction markets and these ambiguous questions, and you have this quote unquote decentralized system that's supposed to like determine whether or not the answer is true. I mean, really, all you're doing is you're allowing whoever controls the Oracle token, the UMA token, to sway the market in their favor. Like that. That's all that's really happening. Anyway, I'm sorry, Rhett, I cut you off.
You can be better and juror at the same time.
Yeah, which is like so basically the game that people were playing unknowingly is they were just making a bet on what the UMA token holders were positioned. Like basically that's what they were actually betting on. They didn't realize it. Yeah, Rhett,
and that's why the volume went so high, because if I saw him wear that and I'm like, oh, he wore a suit, and now I can make a massive profit because the thing's trading at 2 cents and it's going to resolve at $1, I'm going to throw my whole life savings in, and then I find out that it wasn't as unambiguous as I thought. Yeah. And I just lost everything. And so that created this insane amount of volume. The problem with this, and I mean, it's a problem with all the markets of this kind, is lots of questions are ambiguous. And this one definitely is. And part of the ambiguity, like if you look at like how it will resolve, it was like, well, if a majority of journalists agree that he wore a suit, then that's your yes. And what's interesting about this is there was 2 different months where this bet was going on, and he wore that outfit both times. And one of the times it resolved to no, because no journalist said he was wearing a suit. And then the other time, a bunch of journalists were saying he's wearing a suit, but he has the same outfit. So do you stay consistent with last month and you say, well, he wore that outfit last month and it resolved to no, it should resolve to no again? Or do you say, well, the journalist said that he was wearing a suit, so it should resolve to yes? And that's not clear either. Like, is it better for UMA to be consistent, or is it better for them to adapt to that condition change, even though he wore the same outfit 2 months in a row? So then you have this weird thing of like, he wore that same outfit in both June and July, and in June he didn't wear a suit, and in July he did, and it was the same outfit. That seems a little bit weird, but it also seems a little bit weird to say, hey, if it's going to resolve to no, if a majority of journalists don't say he's wearing a suit, no one says it in June, July everyone's saying it. So that like I can see a reasonable reason to choose to resolve in the second month of this either direction. It's hard to know what the right choice is. It's like really hard to know what the right choice is. And so like if I'm an UMA voter, whether I have a big supply of UMA or not, I'm just kind of like, I don't know exactly necessarily what's better for the health of the system over time, as far as like how these things resolve. What builds more trust in UMA over time, a yes or a no? It's, to me, it's like pretty unclear.
I think these problems will only get worse with this kind of market going into the future. Because, I mean, you're going to have more of these, ambiguous kind of like, is it a yes, is it a no? Some people may agree or disagree. And the truth is, maybe it's obvious, maybe it's not. But the way to resolve it may not actually be according to the truth. It may be according to some imperfect metric. And then you may end up with, certain markets that actually resolve as a yes when the truth is a no, but, the way that they resolve that is based on some reporting thing where, like, I think a very easy thing to forecast is, like, imagine a political issue and you are gauging whether or not an issue is going to resolve yes or no based on the outcome of what a few journalists are going to say, right? Well, if all the journalists have a certain political bias, maybe that thing resolves to a certain direction just because of their political leanings, and a stipulation that says that journalists are saying this, therefore it resolved in this way, when anybody who's able to actually go and look at the objective truth of the matter, it goes in the other direction. Now you have a problem on your hands because you have people saying, well, the objective truth is this, but then all the people who are on this betting market are going to say, well, the way that this is resolving is not based on the objective truth. It's based on some other metric that is not an objective truth metric.
Yeah, dude, forget about political bias. Like, I bet you there are some journalists' inbox in the past couple weeks that are just flooded with potential bribe attempts. Like, hey, I'm just, I'm like a panicking Polymarket better and just emailing my friend at the New York Times, like, dude, just publish something on the X account that says he wore a suit, please. Like, I bet you some journalists, I bet you someone tried to bribe journalists. Like, I bet that happened over the last couple of weeks. And yeah, it's interesting, right? Like, we're kind of like, Polymarket is so fascinating because it did like deliver the wisdom of like, it did get to, like, quote unquote, the truth of the election so much faster than journalists last year, right? Which is why it became so famous. But then as soon as you get any kind of ambiguity to the answer of the question, like, is this type of a system actually going to work or not? I don't know. Like in finance, like the derivatives that you bet on, the outcomes are like so heavily spelled out in legal documents, is the agreements and whatever, like that. Like they learned that lesson. Like everything has to be super spelled out. Like the end result of any kind of bet is like, concrete in back, you can back it up in court. But here, like, we're kind of relearning a lot of these lessons, like what can we and can't we bet on, like how, but it is kind of fascinating to watch. JF, do you want to talk about the bet that you made with Tesla and the robo taxis?
Yeah, I mean, it's a little bit similar. So like, I'm on this market for, is robotaxi going to come live before August?
It's on Polymarket. I'm going to look it up.
Yeah, it's on Polymarket. And again, it's like a weird definition of like what is a public launch, and in there they have something that says it cannot be invite only testers, and currently it's still invite only, but you don't have, you're not a tester essentially, as far as I understand. Like it can be any member of the public can actually have access to the app right now. You need to get on a waiting list and they approve you. Some people have been getting approved in the same day. And they're not influencers or not technical people. They're just someone paying to use a robotaxi in Austin.
Is this you? Or do you hold 43,000 yes shares?
Not me. I'm not in the top 10. I have a small bet. But and I'm happy it's a small bet because I think this is not going to resolve correctly. So I think all the yeses are I'm on a yes side because I think it's actually sort of live. So I'm hoping Polymarket recognizes that, but I don't think it will. So yeah, same situation. I think, by the way, all of this is on Polymarket. And I think you captured it with like, definitions have to be super clear. You cannot launch a market that's ambiguous, essentially. If you do, you're just waiting for grift to happen. And the answer should be so clear that if UMA is grifty and sort of like, if there's any sort of like backhanded fraud where people are betting on a market and they're also being the judge and they're judging the wrong way, it becomes very obvious because anyone can look at it and go like, wow, that shouldn't have settled that way. But now you can't because the definitions are super complicated and they're not precise enough. So you need almost like lawyer types, hopefully in words that we can understand, like maybe a lawyer LLM type of thing where it's, in human readable language, but still just extremely detailed. That's essentially how this should run. And by the way, maybe in the future you want an LLM judging this, not some UMA decentralized. Like I would feel much better actually about having, hey, can we have like Grok 4 is the judge on this?
Interesting. Yeah.
Not UMA, because a bunch of randoms can buy UMA tokens and try to scalp me,
Well, I think one of the interesting things that could play out with this is what is the embedding size of this market that you're engaging in right now?
Like, it was about 700K in volume, so it was much smaller than the previous one.
Okay, so but I could imagine a situation where, let's say you have one of these really big markets, like is he going to wear a suit? Well, if I'm Zelensky, right, and I have some money to spare, I'm going to, send my money to a friend, ask them to do a favor for me, and then I'm going to go out and publicly wear a suit. And then I'm going to have a really nice vacation. Yeah. Like, I feel like a lot of these...
Probably highly illegal. Feels very illegal. But yeah, you're right, though.
But if you happen to be the individual who can force one of these markets to resolve in a particular direction, do you ignore that? Or I feel like some people are not going to ignore that chance.
Is Zelensky secretly like a UMA token holder or something? Like he took our money and used it to buy UMA tokens at corner of the market, like, had everyone.
He doesn't need to buy UMA, he just needs to bet on whichever action.
Right, yeah.
Well, so here's the thing, like, a couple of things. I don't think it's going to be illegal. Like if someone made a bet about me on there and it's like, is Rhett going to like eat cereal today? And I just went and bet yes, and then ate cereal and took a picture. That doesn't seem illegal to me. It's not some like, I don't know. I don't see how that breaks any law or something like that.
The analog is like, let's say I'm a basketball player and there's someone's betting on me scoring a certain number of points and I just intentionally like sandbag it. That like I think that is illegal. Like I don't know. I mean, on the sports betting side, I feel like something like that would
just like the league will throw you out, or is it actually like?
It may be against the rules.
I don't know.
It may not be illegal though.
Yeah. Anyway, I'm sorry, Rhett. Keep going.
I think it depends country to country and exactly how things are done. So funny enough, there actually were so there are pro StarCraft leagues in Korea. And there is also like a lot of betting over those leagues, and some of the best StarCraft players in the world several years ago went to prison for match fixing.
No way.
So, there's some laws that were broken related to, intentionally like losing in a world championship StarCraft tournament. So I don't know what all the rules are, all the laws are everywhere, but I would find it kind of bizarre if like literally I could go to jail if like my neighbors bet whether or not I would like, pee on the grass that day. And then I did. And then, I heard about the bet and then I did it. And then I go to jail because these two random people made a bet that I chose to, push in one direction. Like to me, that seems a little bit weird. I personally don't think that it even should be illegal for me to see that there's a bet about me and go, choose to push the market in whatever way I want. And that's like part of the risk that you're taking if you do bet on something that can be influenced by the bet itself. And that might cause a lot of the bets to move closer to 50-50, because if there's a bet out there that has size in it of whether or not I'm going to eat cereal that day, and it's like 99% no, then I'm definitely going to go bet yes and then eat cereal. And then if it's 99% yes, I'm definitely going to bet no and then not eat cereal, right? And so it's likely you're like, hey, if people are going to see bets about themselves and then influence the outcome, it probably pushes most bets closer to 50-50. is what I'm
What's going
guessing.
to happen, Rhett, is that we're going to find ourselves in the UMA Discord debating what cereals, what makes up a brand
Oh,
of
was that cereal? Oh, well, Cocoa Puffs isn't actually cereal technically.
Exactly.
But
Yeah.
one of the points that was made
doesn't count.
earlier, there's a point made earlier that like, hey, we need to get to objective truth and make these things unambiguous. And I think for most things that people want to bet on Polymarket, you can never get to perfect objective truth, and you can never remove all ambiguity. So improving it like on the margin is good, but part of the reason why these are interesting markets is the same thing that causes the problems in these markets.
Yeah, that's a great take.
Yeah, except that people are actually losing money on
Yes.
things that they may find unfair. So it's like,
Yeah.
it's a little, there are some ethical concerns here.
Well, yeah, it's true. You may not be able to get to an objective truth, but like you can conclusively determine whether or not that thing that he wore was a suit.
But knowing that you're playing in an ambiguous market where objective truth is maybe impossible to perfectly come by is kind of like a user beware thing. Hey, I'm betting on something that's ambiguous. The outcome could be ambiguous, and it's not because UMA people are necessarily bad actors. So I just have to factor that into whether or not I want to play this game and at what size.
Yeah,
so
so
I think
basically
one of
you're playing it. So sorry, Jared. Like, listen, I'm going to try to move on because we got one more topic to cover. Sorry, I didn't mean to cut you off, but good luck, JF, on the bet with the robo taxis. I hope they resolves in your favor.
For me, but
okay,
Well,
listen.
we'll
There's one other topic I want to cover, and it's not Epstein. I'm sorry, JF. We're not going to talk about that. But over the July 4th weekend, there was this really almost panic-inducing thing that showed up on X. I don't know if you guys saw it. Basically, someone moved 80,000 Bitcoin at the same time. 80,000 Bitcoin is worth, I don't know, in the order of like $10 billion. It's like $8, $9, $10 billion, something like that. I don't know. But it's a lot of Bitcoin, and it moved from I think it's like 8 total wallets that haven't been touched in over a decade. So people are like, what the hell is this? Like, is this the government? Is this like a hack? Like, what's going on? Everyone's anticipating massive sell pressure. And then someone published this article, which I'm going to share. We're not going to talk about the whole thing, but it's a really fascinating article that someone shared with me. So search for this Eloise, who cracked Bitcoin on July 4th. It kind of details what I'm about to say in much more detail, but basically it talks about how whoever moved this Bitcoin, they moved it with like very precise and a high amount of technical acumen that they basically encoded in some of these things, so the movements. They encoded some messages. So let me just show them here. So first messages. So when they moved, okay. Sorry, I'm doing a terrible job explaining this, but they moved the 80,000 Bitcoin, and it's in 8 separate wallets, 10,000 Bitcoin each. And in some of the transactions, they included messages such as the first one is this legal notice. We have taken possession of this wallet and all of its contents. What is this thing? Okay. And then, is this not abandoned? Okay, prove it by an on-chain transaction using your private key by September 30th. Okay, which I guess is giving it roughly a 90-day window, if I'm getting that roughly right. Notice to owner, see solomonbros.com/owner. And if you go to this website, which let me just bring it up real quick and switch to this tab on the presentation so you guys can see. Where is it? Sorry, guys, just give me 1 second. Owner notice, boom. So then you go to this website, Solomon Brothers, which is weird because that's where I actually used to work. Citigroup used to be, the investment used to be called Solomon Brothers. It's a bit weird. But anyway, there's this like legal notice here. So what's happening, man? Like someone is moving $10 billion worth of Bitcoin and then like trying to lay claim to it and put out a legal notice. So anyway, what's happening here? So people are basically saying like, look, maybe what's happening is someone cracked the private keys for these Bitcoin wallets. And the reason that they were able to do it is because the wallets were from a very early time in Bitcoin where the randomness associated with those wallets, where there was something messed up with it. So the search space was like much smaller than a regular Bitcoin wallet search space. So they kind of brute forced a much smaller search space and found the keys to these Bitcoin wallets. and are now making a legal claim like, hey, like I found this thing, just like any unclaimed asset that you may be able to find anywhere. And I guess there's like some legal precedent for saying like if you find an asset and no one claims it for 90 days after you post some notice, like you can take it. Anyway, would be like absolutely incredible, right? I mean, if it's a hack, like that's a pretty sophisticated legal hack. And like, does this mean there's going to be a bunch of sell pressure for Bitcoin in 90 days? And there's some scuttlebutt on who this may potentially be, but I'll wait to tell you guys that what I've heard people might think it is. Anyway, Rhett, when you saw this, what did you think?
Yeah, a couple of interesting things. I think, yeah, probably they brute force some wallets, and I've heard that before, but long before this came out, I've heard that some of the early Bitcoin wallets were more like brute forceable. And it's interesting. If you brute force some $1 billion wallet, option one is just steal the money. Option two is say, hey, I don't want to go to prison over this, but I want the money, so I'm gonna try and find a legal claim to make. And in some places, there is this kind of precedent. So I actually had a conversation about this literally yesterday. So I was talking to a guy, he works at a gun store, and they had a guy come in.
Were you buying a gun, Fred? Why were you buying a gun?
I was buying a site.
Oh, interesting. Okay, cool.
Yeah, I'll show it to you. It's cool. Buying a site for a gun I already own, which as an aside, I think in places where it's legal, that's a good part of your OPSEC is personal defense. But so I was there talking to this guy. They had a customer come in and buy a short-barreled shotgun. And in the U.S., some of this is going away actually, but in the U.S., there are certain guns, including short-barrel shotguns, short-barrel rifles, silencers, some other things, that if you buy them, there's more like rigorous background checks, and there's like a tax that actually the big beautiful bill is removing the tax starting January of next year. But you have to pay a $200 tax, and you have to do this registration basically with the ATF. So this guy buys the short barrel shotgun. They say, okay, this is an NFA regulated item. You need to pay this tax and fill out this thing. And the guy's like, okay, sure. And he leaves, and he never comes back. And legally, if he doesn't come back within 90 days, they can just consider it their own, asset and sell it. But they didn't want to do that to the guy, so they sat on it for 8 years, and he still never came back. Wow. And then this week, one of the guys is like, we've been sitting on this for 8 years. Can I just buy the gun? And they're like, yeah, sure. So he bought it from the store. And so there is some precedent for that sort of thing. I also think that it's a little bit this is a tough one, because imagine you have a multi-billion-dollar Bitcoin wallet and you're like, hey, it's in cold storage, it's safe, and you're not paying attention to it. And you're just like, I'm not going to check this thing for another decade. And then some person posts this notice that you're not going to see. You're not checking messages on the blockchain. You're not following crypto news. And then you come back and check 10 years later and you're like, where's my Bitcoin? Oh, it got stolen. And then you go trace it. You find these people. You try to press charges and they're like, nope, we have the legal defense because we posted this thing and you didn't reply. To me, that feels problematic, right?
And it's so different than the gun example, because you didn't buy something and leave it behind. You put it in a wallet and someone broke into that wallet while you weren't looking and then took it.
It's I go into Bill's house and take an item and say, Bill, prove this is yours.
And he's have 90 days to memo me that you're missing your stapler.
I posted on some bulletin that Bill doesn't even look at. I post on a bulletin that Bill doesn't even look at, that I stole Bill's stuff and that he can come claim it if he wants, but he doesn't even see it. So that feels pretty problematic. But I can see this maybe becoming a new attack vector where hackers steal funds, but then they announce, hey, if you can prove this is yours, I'll give it back, and then hope that sometimes people won't notice their funds were gone, and in 90 days, now it's mine, I won't go to prison.
I mean, without being a legal expert, I don't know, it just seems like I've worked with lawyers on different projects, and I very seriously doubt that this would pass. You're breaking into someone's private sanctuary and taking their things, right? So it's, to me, and I think there's always been this assumption that unclaimed funds sort of belong to the whole system, right? So if money gets lost in crypto, well, we're all richer because there's fewer tokens, right?
Right.
So it shouldn't really go to someone who broke into that wall. My question is, I don't know if you guys know the answer, but would Satoshis, if this was hard brute forced into, what would Satoshi's setup be like? And are those Bitcoins at risk of getting taken?
Yeah, I mean, I think like basically there's two things that I think could be happening. The first thing that could be happening is this is like basically a legal strategy by one specific person that's trying to reclaim assets, and they're using this legal thing as a shield, and they never actually brute forced a wallet. That's what I hope it is. So actually someone 1 trillion times smarter than me in Bitcoin is guessing that this is actually Ross Ulbricht's set of wallets, and like he basically couldn't touch him because he was out, he was in jail for 10 years. He couldn't do anything with it. And now he's out and he wants to be able to claim the assets, but he wants to shield it from the government coming after it. So this is like his way of like pretending that he found it. Maybe that's what it is. I hope that's actually what it is, because the second option is scarier, right? Like if this actually is some vulnerability in early Bitcoin wallets and it was brute forced, it's probably not the last. And so that means there's going to be some amount of sell pressure, right? Like people are going to find these Bitcoins and sell them. And it could be a big, I mean, I have no idea what's, to answer your question, I have no idea.
The big happening would be Satoshi's.
Right.
Bitcoin,
yeah.
Right?
I mean, no one knows who he is, so I don't know what is there a way to know what his wallet was? I mean, I wasn't really like what type of wallet.
Yeah, I think the Satoshi wallets are known.
Days.
The Satoshi wallets are known, and they're enormous, right? So the problem
but like
is
the randomness used to generate the wallets.
I don't know about that. I don't know about that, but I do know that if someone did get access to Satoshi's funds, they could single-handedly move the market like enormously, because they could dump so much money onto the market. It would be insane. I really hope it is Ross, and that seems like credible, like especially with timing, and he's probably in a defensive position because of some of the things that happened to him. And so, I really hope that it's him, and that would be amazing. But if it's not, if it really is like a would-be hacker, then I think it's a really bad precedent. If it's him, then great. It's like it's kind of a one-time thing. It's awesome. I'm happy for him to get some of his money back.
It also proves like the best strategy in crypto is to like buy and then put it away for 10 years, so you literally can't touch it. Maybe send yourself to jail for 10 years and then come back. So if you could manage it somehow, probably the best trading strategy in crypto. Yeah. Cool. Okay. I think Jared messaged me and he said Jared messaged me, said his power went out, which is why he dropped out of the pod unannounced like that. But okay. Anything else you guys want to talk about? Or you guys feel okay to wrap it up?
Well, I guess Jared just demonstrated how we're in a state of emergency with respect to power. The U.S. I honestly believe that the U.S. Is at like great risk if we don't figure out how to start adding like roughly like an entire U.S. grid's worth of electricity every let's call it year or two. Otherwise, if we can't do that, we lose the AI race. Even if we have export controls on chips, you lose the AI race. You lose the preeminent place in the global world order. So anyway, we can cut that whole piece.
Okay, no, we can leave it in. Yeah, it's fine.
Hey,
and
Elon's thinking about doing a massive solar plant. So yeah.
JF, just because I love you, I'm gonna let you close out the podcast by giving us your thoughts on Jeffrey Epstein's thing, or you can just pass and we can end the pod here. What do you say?
I'll get my thoughts, which are that Trump, who's been the most friendly president, obviously, ever to crypto and has been a friend, I think his sort of sphere of influence, unless he backtracks, which I've never seen him do, but possible because I think there's going to be a lot of pressure on him.
Well, he backtracked on crypto, right? I mean, he initially was very negative on crypto in his first administration. And
but you would have to backtrack. Hey, Jared, we're still potting.
We're almost done. I don't know what happened there. Sorry, we kind of lost you guys. But JF, sorry, just go ahead, wrap it up with your thoughts on Epstein, and then we'll end it.
I think a lot of people are going to turn against Trump. Trump's been the most friendly to crypto, so I think that's going to maybe hurt us a little bit, but not really, because the cat's out of the bag, and overall Republicans are going to be friendly to crypto. The American Party is going to be friendly to crypto, and then Democrats, I think, have probably learned their lesson not to mess with crypto because it's just sort of a losing battle. So I think crypto is like really set up to win over the next 3.5 years and probably beyond that. But I do think Trump becomes less effectual after this week, unless he backtracks on his "there's nothing to see here" comments.
Yeah, that was hard to watch for sure. Yeah. Okay. Did you air it out? We good?
We're good. We don't have to talk about Trump ever again.
Okay, excellent. All right. Okay, well, thank you guys for joining us for the pod. We got some interesting guests coming up in the next few weeks, and we'll hope to see you guys soon. All right. Thanks for listening. Take care. Bye.